Gold. Just the word evokes images of ancient treasures, shimmering jewelry, and a sense of lasting value. But gold is more than just a pretty face. For centuries it has been a safe haven for investors, a hedge against economic storms, and a symbol of wealth and prosperity. Young investors, take note, this isn't your grandpa's old-fashioned investment. Gold is relevant today, offering a unique blend of stability and growth potential that can benefit your portfolio. In an uncertain world, gold stands as a beacon of reliability, a tangible asset with enduring worth. Think of it like this: when the stock market takes a tumble, gold often holds its ground or even rises in value. That's because investors seeking safety and stability turn to gold during times of economic turmoil. This inverse relationship to traditional markets makes gold an excellent tool for diversification, reducing the overall risk in your portfolio. Don't just take our word for it, let's look at the facts. Gold has a proven track record of solid performance, consistently outpacing inflation over the long term. Take a look at the price of gold over the past 30 years. See how it steadily climbed even during periods of economic uncertainty. That's the beauty of gold, its ability to weather market storms and come out shining. From 1995 to 2025, the price of gold has increased by over 400%. That's a remarkable return on investment, demonstrating the potential of this precious metal. While past performance is not indicative of future results, it does highlight the enduring value and growth potential of gold. So why should you, a young investor, consider adding gold to your portfolio? Let me break it down for you. First, gold acts as a hedge against inflation. When the cost of goods and services rises, that's inflation, the value of your cash decreases. Gold, however, tends to hold its value or even appreciate during inflationary periods, protecting your purchasing power. Second, gold provides diversification. Don't put all your eggs in one basket. Diversifying your portfolio with assets like gold, which often move independently of stocks and bonds, can reduce your overall risk. Finally, gold is a tangible asset. Unlike stocks or bonds, which are essentially pieces of paper or digital records, gold is a physical asset with intrinsic value. You can hold it, you can see it, and it has a long history of being recognized as a store of wealth. Now that you're ready to start investing, how do you actually get your hands on some gold? It's easier than you might think. You can buy physical gold in the form of coins or bars from reputable dealers. You can also invest in gold ETFs, which are exchange-traded funds that track the price of gold. Or you can consider investing in gold mining companies. The key is to do your research, start small, and gradually increase your investment as you become more comfortable. Remember, investing is a marathon, not a sprint. By adding gold to your portfolio, you're taking a step towards securing your financial future.